Rideshare driving is an excellent way to make additional income on your own time, but many drivers forget a major player in their long-term success as a protected driver, and that is auto insurance. While most drivers have their own auto policy, most are not aware that personal policies do not cover livery or passengers for a fare, which means if you were to get into an accident while on the job, it could cost you thousands if you don't have the correct insurance. Let me explain. While both Uber and Lyft have their own policies to cover drivers, there are moments when coverage is at a minimum. To understand how this works, let's dive into how exactly each policy is protecting you. While Uber and Lyft provide coverage for their drivers, if you have not disclosed you drive your car for profit to your personal auto insurance, they may cancel or even deny any claims you make. For example, let's say you are in a vehicle, but the app is off, and you accidentally rear-end the car in front of you. Your auto insurance would cover your loss in this situation. But if your app is on, even if you're just waiting for a ride request, and the same accident happens to you, both Lyft and Uber provide third-party liability coverage for this. The issue in this particular scenario with the coverage amount listed is that it is minimal, and if you exceed the limits, you are responsible for the remaining amount. In addition, it does not provide coverage for your vehicle. And since you are in driver mode, your personal auto policy would not provide coverage either. Let's go through one last scenario together. You accept a ride request and you are en route to pick up a rider. During that time, you are covered under Uber and Lyft's primary coverage if you were in an accident. Let's look at what that coverage looks like. Third-party liability provides coverage to any third party, such as a pedestrian, another driver, or property in case of an accident when you're at fault. Coverage may limit from state to state, but both companies provide at least $1 million per accident. So, where does this leave us? While rideshare driving is on the upswing, insurance carriers have evolved and realized the need for a product that picks up where both personal auto and rideshare policies leave off. And while each of these options may work for some and not others, when choosing your insurance, be sure to inform your personal auto carrier you drive for a rideshare company. In addition, be sure to understand the coverage gaps between your policy as well as the company's policy, as smaller rideshare companies, unlike Uber and Lyft, may not provide as much coverage. Be sure to check with your current auto carrier if they do offer rideshare insurance, or request if they can quote you a commercial auto policy. There is a possibility rideshare insurance may not be offered in your state, but if you are unable to find a rideshare policy in your area, getting a commercial auto insurance policy may be the next best option. Being a rideshare driver, your vehicle is your livelihood. Protecting both yourself as well as your vehicle by investing in a policy could save you thousands should you ever find yourself in an accident.